I'm just going to cover off on the major stocks that are the most widely held or the largest capitalisation in my sector. I'm not going to cover the smaller ones, but starting with the biggest one of the lot, REA Group, they're going to report next week. We don't expect any real surprises in the result. What we're looking for is some guidance on how volumes are tracking. This company is driven by the volumes of premium ads. Our forecast for next year at the moment is sitting on 3% volume growth. However, last 6 weeks, our count of ads is up sort of low double digits. And if we put those numbers in, our valuation would increase quite significantly. And again, the company is about to launch a major new mortgage origination joint venture with the National Australia Bank. And if we were to put in pretty good conversion rates on that business, as well as better volumes, we'd certainly get a valuation for REA sort of in the mid-$80, sort of around the $84, $85 level. We don't know whether the company's going to confirm these things or not, but certainly there are some potential developments there that could result in a material increase in the market's valuation of this stock. So certainly running into the result, one should not be selling this name, and certainly if the result, if they give us some good guidance around volumes, we should expect to see a bounce on the day of the result. Moving on to the next largest and probably the one that's probably more widely held through our network is SEEK. Again, this is a volume story. Our volume forecast for next year is 3% volume growth. Last 6 weeks, the average is up 10.6%. So obviously, if the company confirms that at their results, there'll be material upgrades to our numbers and also to the market's numbers for FY18 and beyond. The other unknown that's happening at the moment is SEEK is looking at acquiring Open Universities Australia, or OUA, and merging that with their own online education services business. If they are able to pull off that transaction, I would expect it to be very materially earnings accretive after 2 years, and that would result in quite a big increase in their valuation. So if we just put in the last 6 weeks volume numbers and spread it over a year, and we add on the education business, our valuation would go from the mid $16 up to somewhere in the mid-19s. So again, a lot that's hanging there on volumes and events we can't predict for this stock. We really have to wait for management to confirm that. But certainly, I would not be selling this name ahead of the result. And for traders, it's probably worth adding to positions. But there is some potential upside in this name after the result, assuming there's no negative surprises. Also, their balance sheet is getting stronger after the Xiaopin transaction in China. They are getting quite a big flow back of cash from the Chinese investment. So certainly they'll be very cashed up and able to do whatever they want to do. Moving on to the third name, car sales. Recently, they surprised us and the market by announcing an out-of-cycle 13% price rise for private ads. Basically, this is $8 million of pre-tax profit they've just added to their bottom line in a stroke of the pen. We weren't expecting it. We were expecting them to keep prices under control due to a new owner at their major competitor. However, the new owner at the major competitor has really done nothing with the business since they've been there. They've been in control now for 6 months, and there's no sign of a new challenge to car sales. So big surprise there. And certainly the stock price has moved up. We've increased our valuation to $12.88. But certainly, if we were to see no further action from the competitor, which is Cars Guide, over the next sort of 12 to 18 months, we would expect the share price of car sales to keep going up. because at the moment the market's got very conservative assumptions about what this company can do. Moving down the list in terms of size, APN Outdoor, this stock has been under really serious pressure. There has been some downgrades to market expectations over the last 3 months on fears that the company that there's basically a bit of an overhang of inventory in this space, and also on concerns that the company may lose 2 of its biggest contracts, which are Sydney Buses and Yarra Trams. We should expect news on those any day now, whether they have been able to retain those contracts or they've lost them. It's too hard to call on this stock at the moment, but certainly if they did retain either one of those contracts, I would see it as a positive. So we're not expecting APN Outdoor to report until the very end of the reporting season, so don't expect anyone to get out of their misery on that one just yet. Next down the line, in terms of stocks that are held across the network, GBST, they pretty much forecast what their results are going to be. What we're looking for there is them to talk about whether contracts which were deferred last year are being restarted. We've got very conservative assumptions about the rate at which deferred contracts are restarted. If they come back with their results and say that those contracts are all now going to go live again in FY18, there would be significant increases to our numbers and also to market numbers. Certainly that the share price has been edging up, suggesting that there is a feeling around the market. At least one of those 4 contracts that was deferred has now been restarted. I'll just give you an idea of the leverage of this company to those contracts. Absent the contracts, the company makes EBITDA of 12.2 million. With the contracts working, they make 23.1. So basically almost doubling their earnings if those contracts come back to life. So a lot riding there on GBST. It's a name that I'm comfortable building positions at this level. Even with my conservative assumptions, my valuation's $3.86. And I think that now that everyone's adjusted to Brexit, the big European banks and fund managers who've been sitting on their hands are more likely to actually engage in new activity. And I think the news flow from this company over the next 12 to 18 months is likely to be positive. Moving on to the last name, a stock that's widely held on Catapult. They haven't given us a reporting date at this stage, but we would expect them to report towards the end of the reporting season with a new CEO. Probably they want to go through their accounts in a very forensic way, so the new CEO is comfortable with everything going forward. The company has forecast a small EBITDA profit for FY17. But I think as long as they do that, that'll be comforting for the market. But what the market will be looking for is more commentary about league-wide deals. Clearly, this company fell short of the market's expectations for league-wide deals in FY17, and the market will certainly be looking for the language on whether there's a possibility of getting some of those league-wide deals up over the next sort of 6 to 12 month period. The stock is very weak at the moment, but based on my current assumptions, sort of my valuation's just under $3 a share. So looks like there's plenty of valuation support in Catapult, but again, they probably do need to meet the market's expectations for the EBITDA number for the full year to hold where they are at the moment, and they will need to have some new contract signings to get the share price moving in the right direction.